Hello everyone, it's me, NYSE Einstein from the Florida New York Stock Exchange. Look a little woolly today. There is a lot of green on this screen. Stop the madness, hop this train. There is no negative narrative going on here. The world is baffled. The economists are baffled. Hedge fund managers are baffled. Investment bankers are baffled. Anybody who's got money in this market, anybody who trades, anybody who watches the way markets respond to geopolitical, geoeconomic, severely significant financial stuff from around the world cannot believe that we are not engaging any negativity, no negative narrative around the potential of trade wars with China and tariffs with China. The market tells us what it wants to do. The market tells you what it wants to do. The market's doing what it wants to do, baby. The market tells you what it thinks. We came in after a weekend where these tariffs and these trade wars are happening. They're real, no longer negotiation. We are up 320 points. The Dow, as I told you last week, is heading back to 25,000. We are almost at 24.8. The Russell up 10 handles. The S&P up 25 handles. These daily moves in an upward fashion are massive. Russell closing basically at a record high. The S&P way off that resistance, that support at 2,700, closing at 2,785. Oil, which had reversed in a negative fashion all morning while the market rallied, in fact did end up in positive territory, closing at $74, even money, up 20 cents. Gold up, Nikkei, DAX, FTSE up. Transports up 250. We at the Dow up 320 points. Led by industrials, led by financials, led by everything, a broad-based rally. FANG up 30 points, tech, NASDAQ, forget about it. This market is on fire. It's really baffling. We are not responding at all, even though there is some negative narrative. The financials, industrials led this market. Now the industrials, let's address it for a moment, do have international exposure, do have Chinese exposure, and they were up. Call me crazy? I don't know. We've got earnings season starting at the end of the week. We've got bank earnings to break out of the gate. Now let's remember what we had happen last time. There was anticipation of super positive bank earnings. They did come out, but the guidance that came out with them and the fact that there was restriction of loan growth and there was a lack of demand of credit and the guidance going forward was weak, led for them to actually post good earnings and sell off. We saw that happen. People are feeling that this semester, that this quarter, it's going to be a little different, that there could be robust loan growth. The guidance will be positive. The growth and earnings will be in line and good. Possible they've lowered the bar for expectations so that whatever comes out will be a positive result. And that's often happens in this marketplace. We do need the momentum. We do need the growth. Unemployment numbers that came out on Friday were super positive. You analyze those numbers, I don't get it. Non-farm payroll, unemployment rates per se, adjustments from the month before. All that being said, the market perceived it as super positive numbers. So what am I talking about? I'm seeing stop the madness. Nothing bad is happening here. This market's off to 25,000, up 320 points after a weekend with a lot of possible negative narrative coming out of the China and the trade wars. So this market is telling you there's fresh money to be put in the market, that they like the valuation of where we are, and they are making investments in this country. Giddy up, stick with Inside Verstop, stick with Einstein. I'll see you all tomorrow. It should be a powerful week. Have a nice day.